Every now and then you come across a case where you need to repair or maybe you want to improve something. This is especially true for rental property owners, maybe true of owners of other kind of property, cars, for example. Eh, Anytime you have some sort of asset that has either been damaged or just due to normal wear and tear, you need to fix it up a little bit, you need to get it back into proper working order. You're going to have to spend some money on that. And taxpayers will always want to try to deduct as much of what they have to spend as possible. But sometimes the amounts that you pay or the kinds of things that you're paying for to restore, repair, improve, upgrade that asset, sometimes accounting rules and tax law make it to where we can't just immediately deduct all of those costs. We need to treat it as some sort of improvement to that property instead of just a repair. The question often comes up, where do we draw the line? What distinguishes a repair from an improvement? Or another way to think about this might be, what distinguishes just normal operating maintenance from actually restoring or upgrading or improving that asset? I bring up real estate and cars. These are the two probably most common examples of this. You're driving a car around, this is your business vehicle, you're meeting clients with that vehicle, or you're making deliveries with that vehicle, or you're picking up supplies with it. And over time, that vehicle will wear down. And at some point, you'll need to do some pretty significant maintenance to it, more than just the normal putting gas in the tank or getting the oil changed. Maybe you need to replace a part of that vehicle. Maybe you need to replace some part of the engine, or maybe the entire engine, maybe the transmission. At what point are you no longer just maintaining that vehicle? Are you actually making a significant change to that vehicle? And real estate, especially, real estate is very interesting in terms of this repair versus improvement discussion. Think about when you have a room of a rental property that's got a lot of activity in it, like a kitchen or a bathroom. And over time, the fixtures in that room, they either wear out, or most likely they go out of date. Styles are changing all the time. If you're one of those who likes to look at properties on Zillow, one of the first things you're going to look at when you're looking at a new property is whether the style of the fixtures even matches your style. And a lot of times that has to do with whether it looks dated or not. If that house hasn't been updated since it was built 20, 30, 40 years ago, it's probably going to need some work. And if you're trying to rent that property, you're definitely going to want to get in there and replace some of those old fixtures, worn out fixtures, outdated fixtures, to make it look appealing to potential tenants. When do we draw the line between just doing some minor repairs, maintenance, versus we're actually improving the property, we're upgrading it? That's the topic of this episode.